I'd like to have each of our panelists introduce himself or herself. Let's start with Ed.
Hello. Hi, my name is, I guess I need to follow the structure of the presentation. So introduction, name, background, and what I invest in. So my name is Ed Fernandez. I have a background as an engineer, but that's a long time ago, so almost forgotten. Rusty engineer in any case. Long time in the mobile industry, working for 20 years in different companies. Believe it or not, at my time, there was still no internet in those phones. So that can give you a clue about my age. Then 5 years ago, I started investing in startups together with another 22 investors. We started a micro venture fund, deployed $10 million in capital in 11 companies. Actually, we had a nice exit not long ago, a company called Olapic in New York that was sold for $130 million. That was our best exit in this microventure fund. Then I also started my own companies, still running in Europe. Then 1 year and a half ago, I started my own practice, which is essentially providing access to capital to early stage companies, meaning effectively a replacement in a way to Series B or Series C. So rather than raising capital the traditional route, which is traditional venture capital, you can raise the money in public markets. So we prepare those companies and we help them through that process. And that's kind of it.
Monali.
Hi, I'm Monali Jain. I am an angel investor. I've been investing in the companies for the last 4 years. Member of Keiretsu Forum. Keiretsu Forum is the world's largest angel investing group. We have more than 1,500 accredited angel investors, members across the world, about 35 chapters now, and is growing rapidly. I'm also a member of Space Angel Network. I've shifted from technology and want to invest in the space-related industries. So the companies that build rocket or do the asteroid mining or build the fuel that's much lighter than what NASA can provide. So looking at many, many different innovative companies in that space. My background, for 19 years, I worked in technology. I started my career with GE's Technical Leadership Program that Jack Welch started across the entire international companies. So it was pretty privileged to be there. I worked with PayPal as focused on integrating the acquired companies, most likely the product portfolio. And then recently, for a year, I worked for Accenture, and I was instrumental in their largest acquisition, which is Cloud Sherpa. It's more than $1 billion acquisition. It's the largest in the history of the company. And I'm back again focusing on investments, so pretty excited to be here.
Let me try this one first. Can you hear me? Thanks, Monali. Hello, my name is André Geziek. I'm a software entrepreneur. And 4 years ago, I had a really nice exit. And instead of giving people advice one-on-one on what to do or what not to do, I decided to write a book. And I have it for sale right there on the table there. And if you took one, that's wonderful. I'll be with my credit card reader after the show to take a credit card. But thanks again. I'm also started investing in startups about 5 years ago. And that's mostly through my participation in 2 angel groups. I've been investing a little bit less in early stage for reasons maybe we'll get into in the panel. And I've been more like looking at follow-on investments. And I think that happened is since I started investing 5 years ago, I've seen the valuation go really up 3 times in average, maybe 6 times. So that gets me a little concerned. And we can talk about this later with your questions. And I look forward to the panel. Again, my book's on sale. It's a really easy read. And I'd love if you want to buy a copy. Thank you.
Hi, everyone. My name is Alan Young. I got my start in venture capital as an undergraduate. I was part of a small team of undergrads in between our sophomore and junior years in school when we raised a $20 million venture fund. And we launched in 2004, and we started investing while we were going to school. We made 15 investments, and 4 of them were IPOs on the NASDAQ. Since then, I've been building my own startups. One was acquired by Rakuten, kind of like the Amazon of Japan. Last few years, I built Runway, which is one of the largest incubators in San Francisco, in the same building as Twitter, or Twitter's headquarters. It's home to about 85 startups at a time. I also built a large incubator called Topline, which was right outside of Berkeley and Richmond. And then more recently, I've been running my own small fund called Topline Capital. And I generally invest in AI companies, IoT companies, and I've been looking very, very deeply at synthetic biology. So I probably will place a couple of investments in that area soon. I think that's it.
By the way, Ross Johnson, one of our panelists, couldn't make it. In his place, we have the distinguished Tony DiGiulio. Tony, tell us about yourself.
So I'm Tony DiGiulio, or Anthony DiGiulio, from DiGiulio Seed. I am a seed investor for smaller amounts of investment, usually up to 100, 200,000 maximum. Been doing this for about, 5 years, and started my history for working is a lot of telecom, networking, software, ecosystems, and also hardware. I currently am working with a couple of companies that are doing a cryptocurrency company and also a company that does a specialized lending type of financial tech platform right now for telecommunications and telecom users.
Great. So if you're an angel investor, and I think the majority tonight on our panel are angel investors, what is an angel investor? How did you become an angel investor? Why would you want to become an angel investor? Same thing if you're a VC. And what is the difference between the mindset of an angel investor versus a VC?
I'll take this one. So to me, an angel investor invests their own money versus somebody who invests other people's money. And it's got pros and cons. I mean, the biggest pro, I've been chatting every so often with VCs, and they tell me that they'd rather be in my shoes. Once there are some companies that like to invest, it's kind of difficult for them to put their own money. They have other interests to preserve, and you don't really have a boss, you know? So that's my take of it.
Anyone?
So I'll take why am I an angel investor and why do I invest? I think angel investment is a very interesting space where you get to see the companies at very early stage. Fortunately, I've been member of 2 very good groups, Harvard Angels as well as Kiretsu, where I can collaborate with the fellow angel investors who have the same shared interest of making a company successful. And in the process, we definitely focus on ROI, so the returns are very important to me. I could have been a part of the charity and giving away the money when I feel like giving back, but I want to be an angel investor because I do care for the returns, and I want to build the successful companies or help the entrepreneurs build the successful companies.
Ed.
So in my case, I guess it may be different for different investors or for different angel investors. In my case, I tend to invest as a business angel, specifically in companies that have some early stage technology that I want to have a sense of. You want to understand what is happening in a specific space. You are probably far away from that or doing other things. And in my case, if you want to really have the information firsthand, what is happening there, it's important to be with those entrepreneurs, and a good way to be close to them is to help them by being an investor in their companies. It's a high-risk sport, not for everyone. So that's the other kind of motivation sometimes that drives us to do that as well. And to your point, I believe the most important thing is that we provide that early stage capital to entrepreneurs that nobody else is willing to do, or because they are not still, or their companies are still very mature or very risky for bigger investors. There is another component, is that for some of us that have been there in the past, we like to help others. It's like you are no longer the guy that used to be as an operator, and then you miss that action, and then you help others to get into that action and be a part of that story as well. That for me is also one of my main motivators. So I guess that the advice here is, if you have an idea, look for the right business angels that will help you in your early stage milestones. And with that, ask for their money so that they have a skin in the game. That's kind of the best business angel to entrepreneur relationship.
Now, I'm a little different in that I'm kind of a pre-angel. I do smaller amounts of investment, but a lot of what they were saying is, I think the reason why all of us are involved here is that we like to get involved and we like to hold your hand sometimes and guide you. We like to teach. And many of you I've recognized here that I've spoken with and am in the process of doing that with. And then what I do is if I am able to help you out, I love doing that. I think that's why they also do it. You know, it's rewarding. And then I will take, you know, if I see your company is worth a certain amount of money, I'll connect with angels. Like many of you know how well I'm connected. I just pass them off and get investment through other angel investors and even VCs. And that's just, it's all part of the enjoyment of it and creating that network, and that we all are able to help each other in that sense.
Nothing to add.
Okay. Well, Alan, what was your best investment ever? And what was your worst investment ever?
Wait, best investment ever?
And worst.
Our best investment in the venture fund was a company called Omniture. At the time, they were doing web analytics, and Google had recently bought a company called Urchin, and they were going to come out with Google Analytics, and it was going to be free. So every VC was just running away from that company. Even their existing VCs were saying, well, we're not going to be able to compete against Google. Let's just, you know, write this off. And I figured that they had, well, it would be a long explanation of why we did it, but we did end up, and I sourced that deal. I chased it down. I called them, and I told the CEO I wanted to invest, and he says, who are you guys? And I was like, we're undergrads with a $20 million fund. He's like, get the F out of here. I said, no, really, we are, and check out our website. We really can invest, and we did. And he was really, you know, it was one of our best investments. It is our best investment at the fund. You know, they IPO'd, and by the time Adobe bought them, you know, they bought them for close to $3 billion. You know, so we did pretty well on that one. Personally, I haven't had the best exit yet. It's still somewhere in the future.
You're an optimist. Andre.
So I actually checked it before coming to this meeting. I made 19 investments so far. And the worst is probably a company that's called Moju. I had invested $5,000. Just I didn't invest very much. And I asked my CPA, and he said we can't write it off because they haven't really shut down. They are kind of in quiet mode. So who knows? Something can happen. And actually, it's hard to figure out what my best is. I'm thinking it may be a company called Nightscope. I invested 4 years ago. Valuation was $3 million. And this is what I was told. Today, it's hard actually to find really good companies that have a reasonable valuation. So this is why I'm kind of slowing down on investments. And Nightscope actually, since now is covered by Gartner, they are just about to go through actually a process called a mini IPO. It's pretty interesting. But their next round, they have 50 million committed at 200 million pre. So, well, I couldn't exit yet, but it looks really good, and you should look at that. They have the security robot. It's talked about everywhere. I saw yesterday there was an article on the Wall Street Journal about it. So I feel really good being basically the first round of people putting any money in it. And I've also got 3 investments in which I got some type of return. That means I got my capital back plus. and I still have shares. So that's something that is worth mentioning, and I really want to do more and more. I call this a loan plus equity, if you will, or it's a way to structure the deal so I can get my capital back earlier. It's very important for me because I basically manage our assets, or family assets, and angel investing is a very small portion of it. It's a great idea for me, being an entrepreneur, to be exposed to this asset class. And since I'm fairly savvy, I've been there before, it makes sense for me to do the own investments. This is why I'm never going to put any money in an angel fund. Doesn't make any sense for me. But it's really important that I see my capital back. If it's tied for 20 years, I won't be able to keep doing it. So I have 3 deals, and that's something that I also favor. If there's a possibility to do this type of deal, I like to do that. Thank you.
Okay, the worst investment actually was Pandora. It wasn't because the company didn't do well, it's because I exited at wrong time. But more than that, I would say my worst investment was the time I invested in a company. It was a company called Good Technology that raised more than $200 million. We took it from no revenue to $250 million revenue in the matter of 3 years, exciting run, and then it gets sold for pennies. Like, we really didn't get any return. So I consider that 3 years of investing into a company, my blood and sweat, as not the best investment. After that, I learned my lesson. I decided to invest in the companies that I would like to work for, then work for them. And Apple used to be my best investment. Now it has been Facebook. It has crossed all the gains that I have got in any other company before.
Okay, so for the best investment, I believe I will be highlighting 2. One was this company, Olapic, I mentioned before. That was a sale of $130 million as a New York company. It's a startup. We really started from very humble beginnings. So we bet on the people, actually. We were not absolutely sure how the business was going to play out, but I think we did the right bet in understanding the specifics around the entrepreneur and his team and the escalation into US, because it's a European company. So that, I believe, is the best one. Then I am particularly excited on a company I recently invested in. It's called BigML. It's a machine learning company. They have a platform to democratize the machine learning. So it's machine learning as a service. And I think they really are up to a very strong traction and future with the product. I'm really impressed with the product. And now they are scaling up the go-to-market for that particular platform. So that will be also another one to highlight. And then there are many that obviously we lost the money or they failed. There was one company which it was 2 brothers, and we decided to invest in the company. We thought that actually the bonding between the brothers was going to be a good thing. It turned out to be the bad thing. So family relations sometimes are not properly, could be one of the risks to bear in mind.
Yeah, I'd say starting off, one of my worst ventures was I lost $50,000. I just do small investments. Lost $50,000 in a period of 6 months. It was a special, like a DocuSign company, but it just was not able to get out to market properly, even though we had a patent on it. And the patent turned out that even though the attorney says, we got the approval, everything like that, it was patented, but part of the patent was actually an infringement, and the guy that started the company actually did not know this at all. And so we just weren't able to get traction with that, and we were trying to work around that, how to figure that out. But it was overall just a bad business model to begin with, trying to go up against DocuSign and other companies like that. Currently, one of the best investments I've had is a company I've put in, about $150,000 into this. It's a hardware company that does deep packet inspection. These are hardware systems that telecoms use and networks use to look at all the traffic that goes across the network. And we have currently been doing very well, over $4 million in sales right now. And so I've already received that investment back on what I've turned in. And we're continuing on. We're just slogging through it all. And it's been a good run right now, and it's a little slow and it's hard, but because of that hardness and because of what we've learned, that's kind of what also brings the value out in the investment and what we're going to continue doing in the future.
Great. What are 3 things you look for in a startup before you would consider investing in that startup? Just 3. Whoever. Go ahead, Alan.
Good team, big market, special IP.
Good.
I want their product to be unique and sexy, so people are going to really want to buy it. And I want the valuation to make sense.
How do you define sexy?
I don't know, but it's very easy to define unsexy.
You'll know it when you see it, right? Go ahead. Monali.
All right. What do I look for in the company? I'm really looking for the potential. I think I want to see somebody who can solve the problems and work with the customers to adapt as you go along. Because most of the time, what I see in the product or the plans, 6 months from now, they have completely changed. So I'm definitely looking for the founding team that's learning and adapting to fit the market they're going after. I'm also looking for the returns. I'm looking for a team that's well connected and understand the whole process of how the value is being created. It's not just about a technology product. It's about the stakeholders that are involved and the ecosystem they're trying to build. Last, but the most important thing for me is my fellow co-investors should be willing to invest in the company. So I work with Kiretsu and Harvard, so we collaborate together. Even if I love the company, but 2 of the others had concerns about it, I probably won't go for it.
Good.
Okay, so first thing is the team, the people. We like to say that we bet on the jockey, not on the horse. That's kind of the approach for all of us, I think. Secondly, I like data, so proof points. Whatever the idea, the concept, the product itself, there needs to be a proof point of the value of that product, data from the field, early pilot, whatever. And I think the other element, just to say something different, will be the commitment from the entrepreneur on the venture.
I think to work on one of his points is proof of concept, hands-on. You have got to have something that is active, running. I don't care if you have customers or not necessarily, but if you have proven that this thing is working and you have a special technology or something that it's up, it's running, and you have, let's say, 1,000 people out there saying, this is fantastic, we love it, that's kind of a proof of concept. There's the other proof of concept where you've gone out and you've taken a system, software or hardware, you've gone into 4 or 5 companies, they may not be paying for it because they're helping you develop it, but every single one of them is still using it and they're going to continue using it and they're going to be willing to pay for it in the future. That's a real proof of concept. Through that, I go back again to product. I know everybody keeps hitting on team, but I don't care about the team necessarily right away. I first look at what is the product, what is it doing, how is it doing it, how does it apply to the market? Because a lot of times everybody just wants, like he says, sexy, because it's brand new, there's nobody else doing it. But a lot of investments, when you really look at it, are the same.
Old and sexy, yeah?
You can be old and sexy, yes, exactly. There can be old, you can have old technology, you just have a new spin on it, and you know how to bring that to market. And that's where the team comes in, and that's a big key. Execution. You could be here, have been working on this for 3 years, but if you show that, hey, we've done this, and this, over a period, you've done a very systematic breakdown, and you've brought it out, you've developed it, and you guys have your own investment involved. I don't like to work with people who haven't put their own money in the game. To me, there's just a lot of times, a lot of startups will just come up to you and say, we just want these guys to come up and give us $1 million, and I say, great. How much do you guys, do you have your patent? Did you pay for your patent? No, that's what we're going to use the investment for. I want to see you guys putting commitment into it because that means you're going to have passion, you're going to stick to it. And that's the main big thing.
Great. Yeah, it's always good to have controversy on our panels. or many controversy at least. Do you invest in concept stage startups? Why or why not? Anyone? Do you invest in concept
Would you
stage
invest
startups?
in a concept stage startup? Why not? I personally have not invested. Oh, actually, I did about 10 years ago. I lost $100,000, which happened to be a lot of my saving. And that was a friend building a company. And after that, I have decided not to invest in a concept stage, ever.
Yeah, I'm not a big fan of concept stage either, unless there is a very strong patent, let's say, tied to it. But then I don't have that kind of money to put into it personally, because like I told you, I'm a seed investor. That's when I will contact angel investors who might be invested in that kind of an idea, and they're willing to do a concept process. And a lot of times in concept investment, you're going to do task-oriented financing. You know, you guys, hey, okay, you have this. Well, if we're going to give you $50,000, and in 6 months we want to see it here. If you can do that, then that's where the whole concept idea, you can go along step by step. But concept stage is, yeah, very hard to buy into.
Yeah, same here. Same thing here. It's very difficult to invest in an idea. I think they are all over the place. You just need to Google them, so it's completely commoditized in a way. So there is no longer like the luxury of raising capital just using the idea or concept by itself. And I agree with you. There are some exceptions, and those are based on really new, strong ideas that are going to be game changers. And you know for a fact that it will take a long time before the return on the investment is going to happen, but still there is a strong patent that will eventually become a good product. Maybe it's not the right timing for that product into the market, and you know that, but still you want to bet on that idea. That could be the scenario for an exception, but this is very rare. It's kind of very strong teams from academia, research, that they have something very unique, very outlier, and then based on their patents, you decide to jump in, but otherwise it's very difficult.
So I made one like that, and it was my very first investment, and it's doing really well. I made money with this, and I still have shares, and it's called Instaply. It's a really good friend of mine who came to me with that, and so that also kind of pushed it. I haven't been looking for any kind of concept stage since, and I don't know if I will, but you kind of never know. It really I guess this is maybe a segue to the personality of the entrepreneur. I guess it's more like in him that I trusted than the idea. But the idea was good too, you know. A good person with a crazy idea, I don't know what that is.
What about a crazy person with a good idea?
A crazy person with a good idea. That's the definition of an entrepreneur, right?
You all needed it.
Alan.
Never say never.
Good answer. All right. Silicon Valley is supposed to be about innovation and solving problems. We all know that there are a lot of entertainment platforms, things like social media, shopping, gaming. These things are getting funded. Are investors interested in solving real world problems or just making a fast buck? You can pass on that if you want.
Yes.
Yes to what?
We're doing this because we're trying to make money. That's why everybody's here. Everybody's talking about doing investing and startups and everything else. But as he says, if you can do something that is very important to the world to help do things, to change, let's say, the environment or new technologies for processing water in countries, or there's a startup that I'm talking to right now that does a special farming product that they just take these prefabbed farming sheds and they drop them into these countries and just give them to these people. They have the UN working on it, working with it, and things like that. Those are some of the game changers for certain types of companies, developing countries. And I have a couple of things going on like that right now in Africa. It's an area of mine that I'm very interested in. And there are certain investors too that Rob may know that also are working. One group is called Artemon. They have a lot of, they're a VC group that is quite a few investors from India, and they're looking at new medical ways, new technologies, ways to get medicine to people, things like that. So when you hear people talk about clean technology, and those are the kinds of things that are really starting to come up.
Yeah, just to add, I think it's definitely the future in terms of how we will be driven, more mission-driven than money-driven. But the reality is what it is today, is that any business is actually money-driven and money-fueled, and you need to think returns from an investment perspective. But the mission component is like becoming really, really very relevant, very important. So you need to do something that is beneficial for the others, rather than just making money by the sake of making money. So I think that the whole thing is shifting in a way towards those mission-driven or social-driven opportunities, but still it's early days for that. One of the things we do in our firm is a very small firm. We are 3 partners, we have 6 people in-house only, then we have a group of advisors that we pull in depending on the project, and we work at different levels, at 2 different levels, like traditional or normal startups, especially in a way, and then early stage companies, 5 million in revenue and beyond. So for those startups that are still in the funding phase, whenever we find an entrepreneur that we believe is worth investing in, we do everything, not everything, but we help them for free. And we feel proud of doing that to the extent that our business allows for that, obviously. But I believe that the point I'm trying to make, I believe with time, you will see more and more of that, like resources for people with great ideas or trying to serve others. And now there are more and more companies that start with that idea and then they look for the money or a way to monetize that later on. So that's the right approach, I believe, also for those companies. Look for something that will be helpful for the people. There is a company called Be My Eyes. It's one of the companies out of Singularity. These guys were making a platform for people, for us, to help blind people in critical situations so that they could call you, and because you see and you can see through their phone, you can help them, whatever. It could be across the street, whatever. Amazing results. That is turning into a profitable business right now by using the platform for other uses. But you get the point. You start with a good idea, you start helping the blind people, and you turn your technology into something else that is useful also for corporates, and you make money, and that's perfectly fine. So I think that model is more and more kind of the right way to go.
All right, so I've been donating 5% of my income since 1997, every single year, to charity for the causes that I feel good about, and then I plan my lifestyle around the 95% of the income I have. So do I care about the social impact? Yes, I do, but I have that dedicated fund. I have my own foundation. I focus on Women Can Do It All. I'm a founding member of the hospitals that have delivered more than 1 million eye surgeries across India. And all of those are close to my heart. So I do care about social impact, and that's one part of charity lifestyle. But when it comes to investment, I care about returns. And I'm going to be very clear about that. I definitely think that most of the people and the consumers are going to pay for your services if you're solving their day-to-day problem, not a world problem. iPhone did not solve a world problem. So the things that you deliver to your consumers, to elevate their lifestyle to the next level, that's the innovation I'm investing as an angel investor. I am not looking to dramatically solve the women equality problem through my angel investments. I have my foundation for that. I dedicate certain amount of time for that. So as an angel investor, do I look at the entrepreneurs who care about social impact? I think I do look for the humans and the humanity as a person, but when it comes to business, I think some people might call me ruthless, but I do care for returns.
Andre.
So the way I understood your question is you meant is there like too much buzz in Silicon Valley as opposed to building products? That's what you were asking?
Well, is a return greater than thinking about solving a problem? Because a lot of startups that get funded aren't really solving a problem. They're entertainment platforms.
Oh,
but they make money. So is it more important to make money, or do you want to solve a problem, or a
Right.
combination of both?
So the way I'll answer that question is, and something I talk about in my book, is I think it's very easy to mistake activity for progress. Everybody's very active, and what's not hard is to fill your agenda, for stuff to do every day, but the number of people who actually make true progress towards their meaningful goals is a minority. So, and this is how you advance. So is there a lot of activity versus, progress in Silicon Valley? Yeah, heck, of course. If I just look at the traffic, I wonder, where are all these people going? Is this really important? But I really felt it was important to come to this panel tonight, though.
Appreciate it. Alan?
I think that you can take a portfolio approach and aim for returns for the most part of your portfolio, and there will be some potential opportunities to invest that can get you good returns and solve a very real technical problem. I don't see any. It's hard for me to see any difference in it, anyways.
All right. Well, we've come to our last question for the panel, and it's my favorite question. We've had this event, I think, 7 or 8 times this year, and the question is always, at the end, going to be, it's been a crazy year. We have a few months left. What is your prediction on something that's going to happen for the rest of the year? Could be about politics, startups, sports, whatever. And you are on video, so we can go back and hold you to it later. So one quick answer, or you can pass if you want.
You already have me on record.
Well,
what
let's
I
hear it
s-
again.
Who's going to be the president? And I think that's going to happen. So yeah, he asked me the same question about a year ago,
January.
right here.
Who's going to be president?
Hurry up, we didn't hear your answer.
Hillary Clinton.
All right.
So my prediction, I was going to say, if you buy my book, good things are going to happen to you. But hopefully, I think you got to challenge your beliefs sometimes instead of just keep doing what you were doing before. That's what I was trying to talk about previous question, and I'm hitting on that. And I'm not sure who's going to be president, probably Hillary, but the country is divided, and it's a good time for everybody to kind of stop and think, what are we racing towards every day? Is this what's all this time you spend on traffic, is it kind of really the true meaning of your life or not?
So I'm going to try to tie in politics to what you guys do as entrepreneurs. So if I was in your shoes, I would try to raise as much money as possible, right? So if you're ever in this enviable position of saying, well, do we take more money because there are other investors that want to come in, but we don't want to give up too much equity, I would advise you to give up more equity to get more cash as soon as possible. Because, most of our public institutions have become highly politicized, whether it's the FBI or the IRS, but also the Federal Reserve Bank. So the Federal Reserve Bank has, for a very long time, been keeping interest rates artificially low, very low, and it's under a lot of pressure to continue to keep it low until we have an outcome in the election, right? If they raise interest rates now, it would make things a lot harder for Hillary Clinton. So whoever gets elected, the interest rates will then start to rise, right? And a lot of economists are betting on it. A lot of central bankers are signaling it. Investors probably are anticipating it. But when interest rates rise, it'll create a lot of volatility in the public markets. The public markets lead private equity money, which includes venture capital. And when that happens, there will be a lot less venture capital available. So if you can raise money and you're oversubscribed, you should take more money and give up more equity.
Thanks for the hot tip, Alan. Ed, or Ed,
Yeah, I
Tony.
think as we've seen this year, it's been a very interesting year, and as a lot of us were predicting, it was going to be the year of acquisitions, and we've seen that just going crazy across all industries, from healthcare to hardware. Companies like Qualcomm just made the announcement they're going to buy another company. They already bought another chip company. Now they're buying a third one. You're going to see a lot more consolidation happening immediately right now. They're all trying to get it done before the end of the year and before, as he was saying, before all these interest rates rise and before the Fed makes any changes. They're trying to figure this out. Next year, as investors or startup people, everything else, I think you really need to start focusing more and more on basics. As he says, there might be a pullback in investing, but I think that's going to happen more so in large investors, large VC firms. The smaller investors, like most of us up here, we're not going to be as affected by it. But we will also be expecting, I think just generally across the board, I hear word of mouth. I see what all the schools are doing for venture capital and for startups. You've got to be better focused, and I think this is falling out. This is going to fall out into everything across the plane coming up right now, because I think next year we're going to see a lot more acquisitions, and that can also mean less capability for venture capitalists and for entrepreneurs. When you see a lot of consolidation going on, that means that these markets, these are very established companies, they're pulling people in, they're pulling more startups in, but I'm saying more established companies. And so it makes it a harder barrier to entry for you guys, and especially if we see an economic change coming up.
Ed.
Okay, so quick prediction. My prediction is that 5 years from now, anyone 21 or older, 21 years old or older, will have a startup. So if I have to extrapolate that into next year, it will be like maybe 1/3 or half of the 21 years old population is going to be starting a business. I think that's relevant in the context if you have children. Like my case, I have two kids. That's relevant in the context of how to educate your own children and what to do in terms of being a good parent for them. So the world is really changing that fast, and what we understand as jobs are not going to be like jobs any longer. It will be something different. Not saying that they will disappear. Some of them will eventually, but the kind of work that we will see, or the work environment we will see in the future, is going to be very different. So that will be one. The other thing, and to your point about consolidation, and we saw AT&T buying Time Warner and things like that. So I agree with you. There will be like barriers for new entrants in one way. I think there will be also a ton of opportunity. So those big guys are really playing the consolidation game because they have no other option. And that is also poised for opportunity for those that can identify those opportunities in that context. So I see that as an exciting opportunity as well.
Great. Who's over 21? Well, you're all going to have a startup in 5 years. Well, let's hear it for a panel. Okay, so now it's time for the main event. It's the pitch session. So we've had 4 rigorous, grueling tryout rehearsal sessions, and we've arrived at 7 selected startups to pitch. It's not a contest. No one's going to be ranking them. Basically, it's a platform that we are providing for investors who are interested in investing in solid startups, and also possibly interested in mentoring them. And of course, startups that want to reach out to potential investors or mentors. Because we want to stay in compliance during the pitches. No one's going to state an actual dollar amount asked, but every one of our panelists has the executive summaries of the people that are pitching. 2 minutes, no slides, followed by 4 minutes of Q&A. So first up, we have C. Seydoux and Kali. Let's hear it for C. Seydoux.
The largest 2,000 companies in the world have a $350 billion problem. That's how much they're spending on wages for the hardest to reach employees around the world every year. So far, CSAID has tried to solve that for companies like Microsoft, Goldfields, and Sunlum, and we've generated $300,000 in revenue doing so. So all of us here are employees that are pretty easy to reach. We have Wi-Fi, we live in a developed country, we've got fancy devices, so actually training us and communicating with us isn't that hard. But what about the 40% of the global workforce that is in an emerging market, in a developing country? They've got devices we like to refer to as dumb phones 70% of the time. They're blue collar, they're dispersed, they're out of the office. How do you engage them? If you're at your headquarters in New York and you're at Colgate, how do you know what your brand ambassador in Sao Paulo and Lagos and Nairobi is choosing to see, say, and do at any given time? CSAID is a mobile-first HR technology company that means you can literally in 5 minutes know every employee, what are they seeing, saying, and doing, what it is that they need to do in the future. And the secret sauce that we have going is that we pay the employee. So every time an employee chooses to see, say, do, they get airtime, data, cash, things that don't mean a lot in this context, but in those markets, that forms up to 10% of their disposable income. So as a result, these guys are spending 10 minutes, 15 minutes at a time, saying, and doing. As a founding team, this isn't our first rodeo. Before CSAID, I had a company called Spoken Inc. that educated 1.5 million people in emerging markets using mobile phones. We're here to raise a fund to take us to our next 25,000 users, which we believe will generate $5 million in revenue. And the great thing is to do that, we only need to convert about 6 to 9 clients. Those 25,000 people represent 0.001% of our addressable market of 37 million hard-to-reach employees in the largest 2,000 companies. In the largest 5,000 companies, that number becomes 100 million. Thank you.
So I think it's a great problem that you're trying to solve. I'm not clear on what is the solution. So you mentioned they get the cash, which is a big chunk of their income. That is understandable. But what does your solution actually do?
Well, let's use a use case of one of our clients. So Goldfields is a mine registered on the New York Stock Exchange. They have 10,000 miners in Peru, South Africa, Ghana, Kenya. And the issue was the CEO, if he has any message to go to, so I'm being told to speak into the mic. If he has any message that's important to go to his 10,000 miners, there's no way he can actually reach them. So with CSAID, he goes on his platform, the HR manager says, hey guys, there's lots of methane in the air right now. All of the chosen miners will get a message on their smart or dumb phone saying, hey, come CSAID this. Why did I do that? Well, by the time you finish doing that, you've got maybe $1 in airtime, data, or cash. Typically, 80% of the workforce that we engage will come and CSAID in those first 10 minutes. And that's our model. So we'll charge the client for every person that came to CSAID during that month, and we'll pay the incentive to the end user. So they're on their phone, CSAID and doing and getting rewarded for it.
Can you describe the process for selling this solution? Who do you sell it to? What's the sales cycle? Is there like an onboarding thing, or do you have to do a proof of concept first? Or?
We'll Great question. So sales cycle is the bane of my existence. It typically takes us about 6-7 months to get one client. Like I said, we were working with Microsoft, Goldfields, Sunlum. The average time there was about 6 months. How we do it is we speak to and you understand how complex these companies are. We speak to the HR manager or the head of innovation or the head of communication. We typically do a POC with a small amount of employees, say about 100, that come and they say do. We give the report. And importantly, they begin to see behavioral change, right? So in the mining example I said, well, if we can demonstrate that 60% more miners took the methane class because they CSAID did and got paid $1 for it, that becomes important to the client. So after the POC, we feel like we can convert a lot quicker.
So you mentioned these particular companies, Microsoft and so forth. And we're talking about the proof of concept with each customer and how you're doing all of that. And you currently have $300,000 in revenue. What is it that they liked about your product and they chose yours over other competition?
So currently in the Bay, there's about 700 HR tech startups. And that's a lot of competition. What we realized, though, is that, to our surprise, not many of them are looking at the 40% hardest to reach. So if you look at the spectrum of HR tech companies, they're speaking to us. People with Wi-Fi, with great devices are saying. And so I think what strikes them is, yes, they've got tons of options if you're trying to speak to someone who is in a big city, in an office, in a cubicle. But how do you get the brand ambassador right now is at a traffic light in Nairobi and speak to them now? Who's our competition there? We're not as confident there's as much competition. And so I think what speaks to them is that they can rest knowing that compliance is standardized throughout their global workforce. They can rest knowing that the regulations that are quite localized in different markets are being taken to market. And also without us, they're spending about $1,500 training one person for 3 days. With us, they're spending $5 a month on mobile. It's a lot more direct and it's a lot more measurable. We do anticipate the competition will come because it's not rocket science of what we're doing. And so we do need to be able to race to market pretty quickly.
Can I ask a real quick question on that? When you're referring to these are hard to reach workforce, is there a technical term for that in that industry or anything? I don't know.
Not that we're aware of. What we're looking for as metrics that they're harder to reach is, do they typically cost more than $1,500 to engage? Is that me? Do they have what kind of job are they working? What does it pay? So typically a hard to reach worker is earning less than $50,000 a year. And what country they're in.
Right. Next up, we have Tony from Go Carrot.
Hey, I'm Tony, and I'm here to disrupt the healthcare market. And 60% of healthcare costs could be evitable if you do a healthy lifestyle. And that's what we're going to do with the Go Carrot. We're going to motivate you to get committed to someone close to you and get you motivated to get a healthy lifestyle, better nutrition, more active wellness, whatever. So imagine you have to run a half marathon in 4 months, and you get commitment to your marriage, like spouse, and you get rewarded from your spouse going together to football game in 4 months after you complete your marathon or half marathon. And this person will get updates. He or she will cheer you up and will sell these services to insurance companies to get their members more active. We have a first proof of concept as their excitement from insurance companies. They actually want us on meetings to show the products. We're working right now on MVP. We have a dedicated team of professionals like with experience in McKinsey healthcare, lifestyle and wellness coaches, product developers. We have a 10 billion opportunity to capture out of 3 trillion market. And we don't have a ton of competition right now, but the momentum is unique and short. So we want to raise some additional capital to our self-funded firm to be able to get the first pilot studies with the first insurers and to have early revenue, early profits. We actually plan to get after break-even in just 6 months. And we're targeting to get more than 10 million of revenues in 2 years, spending first 2 years to honing the product and getting the first customer base. We also have different sources of monetization. If something goes wrong with first source, we can work with employers. We can charge directly from customers, like subscription-based, like marketplace for coaches. And we have advisors working with health plans.
So you mentioned you're directly going to work with the insurers. So an insurance company is going to make sure I need to, as a customer or a consumer, need to use your product for tracking my data, and then the insurance company will use that data to give me certain points or whatever.
Yeah, exactly. Yeah. So insurance company will save around $1,000 per year for your commercial plan if you are more active and getting a better nutrition. So they per se motivated to get you there. So we don't charge an end user. We provide it through insurer. So we charge insurer only for the success or some cost coverage. And we the reason why I'm making pilot studies with them. So we take a sample, like 50,000 members out of 1 million members they have, statistically enough to prove the concept, and statistically enough to measure whether you had some progression with someone comparable to you or to yourself last year or not.
So how many pilots do you have going on, and what is the outcome? What is the churn rate? How many members are actually using the product?
So we right now finishing MVP. We're going to finish by the end of the year and have a first pilot study, hopefully first months of the next year. And the reason we've never done it yet, because we don't want to get in a position when we have a pilot study, great, but we don't have enough capital to sustain it, and we'll fail just because we don't have enough like server capacity, whatever. So that's the stage.
So I'm gathering your pre-revenue, but I thought something. Have you tried going to Weight Watchers and showing them your idea? Because they would seem to love that, and if it works.
Thank you.
Because they market all kinds of products too. You got to convince them, obviously, but
We'll try.
How do you overcome the problem that, I think your customer, you're selling to an insurance company, right? But they have to then be super invested into getting their membership to use your product. And they're not likely to pass along that data, that customer relationship to you. So how do you ensure that you have a high level of engagement with the end user when there's someone in between you and the end user?
So like in the background, insurance companies are very eager to this kind of solutions. They have like special departments looking for startups working with this patient engagement and behavior change. So like they actually want to make it. The second part about the data, it's a great question. So we're gonna use only like your data of like phone number or email to send you this request, even probably on behalf of insurance company. It's a like point of negotiation. But we don't touch your personal data like on your sickness or like illness history, whatever. That's something on the side of insurer. And that's why actually we need the capital to make sure we get this data integration very diligent and carefully. That's the only like challenge working with this client.
Got a lot of time left.
Well, I could still mention, if we have some free time, that valuation for this market for comparable companies is around like $100 per user. So you don't have to be viral. You don't have to have 10 million users to be a big successful company. There are a lot of legacy players like Virgin Pearls, Kias, Redbrick Health, which started as employer-focused solution, as a corporate wellness, and right now moving to the health plan field.
Okay, so basically right now what you need is money to go out and test the field, the industry and everything else. But you didn't mention what that money was going to be used for and how much do you know what the costs are going to be for that?
Yeah, sure. So you have it in the memos. And the use will be to have the data integration with the insurer, to finish the product, to hone it, to include feedback from insurers, because we're going to pitch them on sales like, guys, we're open, flexible for your needs. So if you want something to change, we can make it. That's like basic need for capital right now. And for sure, like in the parallel, we'll try to pitch new clients and it will take like extra costs. But that's why we have a range of costs. So like the minimum of the range will be just putting it with a couple of customers. The maximum of range will be try to get new customers, some sales, etc.
So by the way, if you go to our meetup site, it's listed under idea2ipo.com. Under the event description, in the comments section, we have a listing of the presenters and their websites, so you can follow up with them and read up on what they're all about. Next up, we have Kevin from Piscus.
Good evening. My name is Kevin Xiang. I'm the founder of Factory Pickups. Factory Pickers is a company built data analytics system for the industry. We help them to reduce the production cost. We started our company 8 months ago in California. In the past 4 months, we finished our first contract with Portal and Gamble. This brings us $200,000 revenue. As a result to using our system in their factory, we help them reduce 10% energy consumptions and largely reduce on-schedule downtime. Based on our good result, Portal and Gamble show a huge interest to keep using our system in the rest 20 factories in China, and this is a potential $4 million revenue with same customer. In the meantime, some other F100 company like Unilever also express their interest to using our product. For our team, there are 4 people in our team. 2 of them are from big company, Google and Twitter. They have 10-year experience in machine learning and big data analytics. Our target area is material process industry, like chemical, food, medicine, and oil. There are 300,000 factories in United States. This amount of factory bring $60 billion market. Based on Goldman research, over 35% factories rate extremely important on reduced optional cost. This is a great opportunity. I invite you to join this opportunity with us. Thank you very much.
You mentioned Procter & Gamble as a current customer. Procter & Gamble is huge. And was that here or in China? Plus, you mentioned real quickly there that you had a follow-on of $4 million contract with that same company. Is that true?
Yes. The Portal Gamble in China, they have 20 factories, and right now, because our result is good, so we want to sign another contract with us. Right now, we are in the process to sign that contract.
Okay, and that one you're at $200,000, and the next contract is going to be a $4 million contract.
Yes, that's correct.
Okay.
Okay, you mentioned that you can reduce the costs in production.
Yes.
But it's not very clear how that is happening. Yeah, big data analytics, but can you be more specific or tell us anything?
The benefit I bring to the factory, you mean? So it's include a lot of things. So firstly, we help them reduce the consumption of energies and raw materials, and we also help them increase their productivities. And the last, we help them to make predictions of equipment failure. This is the benefit we bring to them. And our system using the very advanced math models. It's separated in 2 parts. Firstly, we compare the historical data, and then we also combine with professional engineer experience and method. And one of the second part, we also sign up for the patent, and we have a patent that kind of technologies to let the engineer and using the normal language, so they can enter the principles to the systems, so they can teach the system to be smarter and better and answer data.
Okay. Do you measure input or the middle of the manufacturing process or output? Where does your technology go? And then finally, is it once you've optimized, then you reach a steady state, right, of optimization?
So right now we are optimizing their production line. Is this your questions?
When you go into looking at a manufacturing process, right? Are you looking at inputs? You know, are you doing math? Are you doing the data analytics on the inputs or the process?
We're doing the data analysis in the process. So
during
the data
the process,
collection
right?
in the process.
Okay, yeah.
Yes.
Okay, and then once you've optimized, then don't you reach a steady state?
Yes. Right now, because they already using they already using our system for 4 months already. So right now, our optimization, they follow our system's optimization suggestions, and right now the process is very stable. It's stable.
Okay, I'm trying to understand. You mentioned you have analytics and capturing the data through the process. I think I get that. You also have AI, which is artificial intelligence. So what do you use through the manufacturing process? Do you have sensors, Or what is the piece of artificial intelligence?
So just a little background. So right now the factory is in automation process. Most of the factory in the world are automation process. They're already using the sensors to collect the data in order to control the machines. So for our system, we don't add additional sensors. We just keep using the sensors already in the factory.
So who are the players and who are you partnering with?
Who is my partner?
Yeah, in the sensor industry, because I think you're going to have
we don't need a partner for the sensors because the sensor is already existing in the factory already. They're already using these sensors. So when we just install our system in the factories, that's all. So we don't need to, sorry.
Okay, yeah, just to clarify, I think we have too many questions, but that's a good thing. If I am understanding this correctly, there is a factory that essentially you are gathering all the data around the manufacturing process, and then you analyze all that data so that learning from the data, I am assuming, you get into improving the production process. Is that a fair assessment of how it works?
Yes, I can give you a simple example how our system works. For example, my system detects low productivities, and my system will tell the users what's the reason causes low productivities, and how can you fix that. I will provide all the fixed plan to you, and you follow your plan to optimize the parameters. Then you can keep the maximum efficiency rate when you product. Thank you.
Next up, we have Greg and fetchmypet.com.
Hi, my name's Greg, and I'm the co-founder and CEO of Fetch Labs, and I'm super excited to tell all you guys about our product, which we just finished alpha testing on, called Fetch My Pet, the Smart ID Tag for Pets. Now, there's 150 million dogs and cats that are registered in this country, which does not account for the unregistered pets. More so, it's a $60+ billion industry and growing. So it's safe to say that pets have become part of the family. Now, the scary thing is you don't want to lose a family member, right? So 1 in 3 pets go missing, more so 10 million every year. Now, the old way of solving that was to put a microchip implant in the neck of that pet. That actually has 50% of the time the incorrect owner's information. Why people move, they don't know how to update it. It's not up-to-date technology. Now, that also is a $300+ million business, and it only accounts for 5% of dogs and cats in the US. Now, as technology progressed, they started making things such as GPS tracking devices. Those are like buying a cell phone for your pet, which is just ridiculous. You have to buy a cellular plan, you have to charge it every 3 or 4 days. I have a hard enough time charging my Apple Watch, which I'm not wearing, let alone my dog. So, what have we done? We've created a product that's battery life is 12 to 16 months. There's no charging, and our cost of manufacturing is just $3 per unit. So, the idea is that, or not idea, we already have it out there with users, but the thing is what we're doing is that we give these out for free, and they pay a $5 a month service fee. And every year, they get a new one in the mail. So, what are our services? Because we're not positioning ourselves as a hardware company, and we're not a software company, we are a service provider. Just like AOL handed out their free CDs at every single Blockbuster, think toy inside the cereal box, every single dog food bag, pet store, what have you. So, our product has tethered network GPS capabilities for Amber Alert, or as we call it, Rover Alert technologies. We also do things such as carrying all the medical records, all the contact information, as well as carrying all.
Hey, you have a long history of like huge brands. Is that because you were in an agency, or did you actually work in all these brands?
So, I worked for eBay, Visa, as well as Drafts FCB. My co-founder works currently for McKinsey, as well as our iOS developer currently works for Deloitte. We also have on our team...
Yeah, but with your Gray and General Motors and Apple, is that through an agency?
No, that was me.
Okay, so
Yeah.
you've spent all that time in all these companies?
Yeah. So
in what role?
So companies like General Motors, that was purely internship, right? However, when I was at eBay, I was a senior UX designer. At Visa, I was a lead UX designer, led a team.
So is this a product problem? Is this a product execution company or a marketing execution company?
So I would say it's a mixture of the two. However, it's a matter of marketing, getting it out there. The manufacturing process, as far as a product goes, should be fairly simple. We're utilizing Beacon BLE technologies, so we're preloading that with our software, meaning that that's why we have such a low cost.
I mean, it sounds like a wonderful idea. Think about our cat. She's always missing, but then she comes back. But I have a couple of questions. If a pet really goes missing, you know, how do you help? Because this is really the biggest issue. Once he's got the device,
Yeah.
how can you help?
So once the pet goes missing, not only does our app act as an invisible fence to your pet, what happens is that push notification is sent out to all users within a 20-mile radius. They're alerted, just like the new digital form factor of posting that missing pet sign, but also pet shelters and veterinarians are also alerted.
So you need a network effect. This is what's going to...
Yes and no. You can, I mean, if you hand out 200 to 300 of these in San Francisco, you then have your network grid, and we can hand them out for free.
I was looking at a company that was doing this for toddlers or children with disabilities, and it would sound like a really good idea, but they are struggling, actually. I don't know the full information, but it's like, you know, technology is kind of a, you know, extra thing, and you never have it the day you actually need it, and or the battery is out, something like that. So what do you do for battery life? Is it something you can just install and you're covered for years?
Yeah, so the idea is that you pay a $5 monthly subscription. It's kind of set it and forget it. Every year you get a new one in the mail, so it's just a replacement, recurring revenue. And yeah, we would offer direct communication with your veterinarian. We also have a 24/7 type of service where you can talk to a trained professional. Say your dog's lips are turning blue, what do I do, right? So it offers an array of services, and then we can also, as we start talking to with pet insurance companies, major pet brands, and things of that nature.
And how do you sell this?
So the idea is that we would either go through customers or strategic partnerships with these major manufacturers or veterinarian chains, or we would just start handing them out for free, or you know, just if you register for the app or register on the website, you'll get one in the mail.
Yeah. Thank you.
So you said you're raising 500,000. So what stage your product is? Are you going to use the fund for building the product,
Yeah,
or it's
so-
already out there?
So we currently, I mean, we are early stage. We have 30 testers right now, right? We just finished our alpha testing. What we need this capital for is to get into our first few thousand manufactured, as well as just to get the full app polished, just, you know, some of the final bugs. But otherwise, we've been handling it ourselves, and I've been investing it myself, or funding myself, yeah.
So you were just talking about the money involvement here, and you're talking about manufacturing and the product, the hardware, and everything else. What is the total cost, let's say, to acquire, let's say, 10,000 users? Do you have that breakdown at all? And I mean, do you have a rough estimate of what
As far
it's...
as the marketing cost goes?
Well, marketing, your hardware, that little product,
Yep.
you know, what does that cost per each one, and everything else? What does it cost to acquire each customer?
Yeah.
I mean, you may not know that yet, maybe because you're talking 10,000 or 50,000 or whatever. The costs are variable, right?
Right. I mean, right now, it's just, you know, rough estimates. We have that, you know, sort of 5-year breakdown. As obviously time goes on and more users are there, the production costs go down, right? I mean, that $3 figure is based upon a 10,000 unit plus type of manufacturing scale. Right now, we're at about $8 to $10 per unit.
Okay, but that's just the hardware. Then do you have
Marketing
any?
scale, that all
You don't know
depends-
that yet?
That all depends on the strategy in which who we're partnering
Right.
with as far as distribution.
Okay.
Yeah.
All right, next we have Daza and Danny from New York.
Hello, my name is Danny, and 15 years ago, I started Danny Web Online IT Discussion Community, which I've since grown to over 1.2 million registered members. I've now taken all of that experience I have building communities, and I condensed it, and I'm now releasing it as an API that connects people. The DASA API is a patent-pending technology that takes collections of users, curates the collection, and matches the users based on mutual synergies, interests, whatever the goals of the application that's using the API happen to be. Use cases include meetup groups, chambers of commerce, dating apps, alumni organizations, anytime you have a collection of users that have a need or a want to find each other. What makes our API unique is it actually functions as an API network where all of the different applications that use the API have the ability to exchange data with each other and learn more about their own audience by sharing the data that the other applications that are in the network know about users that they might have in common. Danny Web used to pay $8,000 a month in web hosting costs, but since being migrated onto the DASA API, it's now only paying $4,000 a month in hosting costs. Danny Web currently makes over $25,000 a month in gross revenue, of which $7,000 of that is exclusively a result of the functionality that the DASA API brought to it. The business model for DASA is that the end users of the API actually pay to connect with each other. And the amount that they pay ranges from a penny up to $5 and is based on how much money.
You can finish it, done.
And okay, so they pay, and it's based on how much money the person that's being connected to wants to meet the person that's actually initiating the connecting.
Okay, I want to understand. So the transaction is when?
The transaction is what?
So you mentioned the person who is trying to connect
Right.
will offer a certain amount and the other person will have another amount. When is that transaction happening? That, hey, I want to meet Danny, so I'm going to pay $5?
So the way that the DASA API works is user A wants to connect with user B, and so they say, okay, I want to connect with user B, and the algorithm determines, based on behavioral targeting, based on all the data that it has, in its database of how much user B wants to talk to user A, and so then I'm going to pay an amount based on how much you want to talk to me. And so the idea is that it gets rid of a lot of the problems that LinkedIn has in terms of recruiters just trying to cast a wide net. So as my one use case, for example, is Danny Web, in which it's a tech support community, and when you go to ask a question on Danny Web, it's a free community, except there's a little checkbox saying, would you like to spend a couple of dollars to be matched with other members of the community who are likely to be able to answer the specific question that you have right now? And then that matching is, goes to the DASA API. DASA comes up with the perfect person who happens to be online right now, who happens to have experience answering similar questions in the past. And the majority of my users of the Danny Web community actually do that, and that contributes to $7,000 a month in additional revenue for Danny Web.
So that's a fascinating concept. How are you going to create, so sounds like you need to create this islands of communities for them to work, or are you going to create an ecosystem where the other people are going to build those communities for you? What's your go-to market?
So I build communities. That's what I've been doing for the past 15 years. So I have my Danny Web community that has 1.2 million registered members. I also have the largest meetup group, the largest tech meetup group east of Manhattan in Queens and Long Island. And I also have the only tech-only co-working space in Queens, New York. And so I originally created this concept to solve all of the problems that I have. So my goal is, so I have all this experience building tech communities, and I'm now using this API to onboard tech job boards and other, and be able to have other third-party apps leverage my tech communities, and also take this technology and apply it to all different industries. For example, music industries that would hook up producers with musicians, and real estate industries that would hook up, So the idea is that, to take this technology that I'm already using in the tech world and, get funding, and be able to then do one vertical in one industry at a time.
Do all these communities have to change their privacy policies when they implement your technology?
So the way that we work is right now we work exclusively with OAuth. So what you need to do is you need to replace your sign up or your login with our sign up and login. We handle all the privacy concerns, and we make it very, very, very transparent to the end user. And once they do the sign up and login process, then all the other functionality is transparent. And
Wait, so someone who implements your technology now,
right.
all of their users will all of a sudden tomorrow see a whole new login process. They have to go through OAuth, and then then that'll be okay afterwards.
Exactly.
But okay. So there will be some like leakage, some loss of user membership because of that.
Well, it really depends. Right now, that's exactly what happened with me, and I didn't personally find a lot of leakage just with DaniWeb, except we're targeting right now different types of niche meetup groups that don't currently have any type of means of leveraging their audience, and so we're basically giving that to them. So they don't exactly they don't have an existing application.
One more question? One more question?
All right, next up, we have Brandon and Cloud9.
Thank you. My name is Brandon Mayers, and I started Cloud9 about 4 or 5 months ago. We're currently based out of a Stanford incubator, and it was really a project that kind of stemmed off another company that I started that's a smartphone company that's doing tremendously well, that Ed actually knows a little bit about. And so we started to try to research building a communication satellite, and we did. And we got involved in it and realized how expensive it was and how long of a wait it was, like 2 years to get launched on a traditional spacecraft. So we decided that we would do our own launch, and we did. So we teamed up with a world-renowned rocket designer who holds the world record at 386,000 feet, as well as a gal who started a very successful high-altitude balloon company. And we're going to take our 22-foot rocket up to 135,000 feet, and we're going to launch it because there's way less wind resistance there and gravitational force. And then it will go and travel to about 220 to 240 miles. And then our specially designed nose cone on the end of this rocket will open up and deploy up to 16 1U cube satellites. We managed to build an impressive, excellent team of a board of advisors. There's also myself, as well as some engineers. We have in-house counsel, IP. We filed several patents. We already have a $1.5 million purchase order. We have several letters of intent, and right now we can offer launch for about 50% less than traditional rocket like SpaceX, Blue Origin, etc. And that also still enables us to get about a 65% margin. And our communication satellite that we also do gives us about a 50% margin. We can also license that signal and make about a 95% margin. So with our investors investing, with the research that we've done, we're looking at making somewhere around 20 million in year 2, which is going to give our investors about a 14x return on what we're trying to raise. Thank you.
So you mentioned $1.5 billion purchase order. What is that project about?
That's for that communication satellite. That's to launch that.
One satellite launch?
One satellite, yeah. It's a communication satellite. It's very unique. It has a 90-mile radius. It's a 1.6 to 2.4 gigahertz radio antenna that works with cell phones. We can license that technology out. It was designed for our phone, but we can also license it to Samsung, Apple, anybody.
From order to launch, what's the ramp-up time?
The ramp-up time? See, that's a great question, actually. So our first launch is going to be less than a year from now, but one of our big advantages is that we can launch literally within like a few weeks because we have a mobile deployment system, and we already have clearance to launch in Arizona as well as Mexico.
What's the regulatory environment to be able to launch satellites from balloons like that? Can anybody do that, or do you need some type of approval from?
Oh yeah, absolutely. You have to have approval from the Office of Space of Transportation, ITAR clearance. There's all kinds of clearances. And they're not impossible to get, but they're there just for safety.
And what's your timeline to get those?
Those are actually relatively easy to get. The only thing that's probably one of the biggest challenges is for that satellite is to get approved by NASA. It takes a little while. It could take up to a year.
So NASA's involved too? Because you mentioned another agency.
What was that?
You mentioned another agency before. So NASA is involved as well?
There's all kinds of agencies. The UN Office of Space Transportation, the Office of the U.S. Office of Space Transportation, et cetera, et cetera.
And if you launch just south of the border, would it be totally different then? Just curious.
Not necessarily. It's kind of like a globally adopted
Okay.
law. You could still, if you launch illegally, you get like 5 years in prison. You don't want that.
No, you don't want that. Thank you.
I wanted to clarify, you mentioned that's the communication satellite. So are you building satellites or the rockets or the actual launching?
Great question. So our core fundamentals are launch. 1U to 2U to 3U CubeSats. That is another project. It takes a little bit longer, but we're also going to be doing communication satellites to sell to cell tower companies, carriers, things like that.
What are your backgrounds? Are you engineers, or where did you study everything?
We have engineers. My personal background, I've started a lot of companies and I build stuff. My first company was pretty successful. And I started a marketing consultancy and then a cell phone company that's done pretty well so far. And now this.
Who is your competition? Do you know other players?
Yeah, absolutely. It's really just the big guys because there really isn't too many big guys right now because a lot of these other rockets that are trying to launch, I mean, some of these guys are launching at only like 400,000 feet and it's like, it'll just go. And so SpaceX, Blue Origin, Interorbital, and Orbital are some of the big guys. Those are the main people.
How easy or hard is it to copy your invention if somebody else wants to do the same? Kind of what's proprietary, what's protected?
We have a little bit of IP right now so far, but I've hand-selected some of the best people in the world to do this, and some of the only people, like the world record holding Kai Michelson. There's nobody else who's come even close to that, and he is on my team. He is a partner as well as the balloon company. Where are you going to find balloons? There's not too many people making high-altitude balloons, so I've managed to get a hold of everybody first and really get a hold on that.
Does the balloon survive the launch of the rocket up there? Or?
What was that?
Does the balloon survive? Is it recycled? Does it survive the launch of the rocket? Or
no. No. Well, technically, there's two different kinds, but generally speaking, it does come back down. They can retrieve it.
Okay.
So you mentioned you're going to build the satellites. You're going to do all these different activities, and it looks like you have the engineers on your team. What's your background? Have you built any companies in the space before? Who are your advisors?
This is my first space company, but I'm no stranger to the technology and communications side of it with the smartphone company that I built. Before that, I built a composites company that made parts for high-end sports cars, and there was a lot of technology involved in that too that got acquired.
What is the valuation for those? What is the size?
Yeah. So pre-money right now, it's like $6 million.
Last but not least, let's hear it for Art and pooling it.
Hi, I'm Art Cohen with CEO and founder of company Pooling It. Pooling It is a company that pools money together for people who are interested in buying lottery tickets. But instead of buying them directly, they buy into a pool. They buy a percentage of a pool. And with that percentage, they win a percentage of the winnings. Now, the business model for this is quite unique because there's multiple revenue streams for pooling it. For instance, we charge a simple fee of 99 cents per month. The players then get access to over 20 pools to play a month. They also can pay $1.99 and have unlimited pools. But most importantly is that we partner with the state of California. And the state of California Lottery gives as a seller of the tickets, as a retailer seller of the tickets, and also a buyer of the tickets for the players, which we scan the tickets and email out to them. We then get a 6% commission on each one of those tickets that are sold, 3% commission on those that are redeemed for winners. What's really exciting about our system is that I have here a packet of lottery tickets. Now, probably everybody here has probably played lottery at least once, maybe twice. Some people are regulars, don't want to admit it, and that's okay. These are all losers, right? Well, that's what usually happens. With our system and our pools, we guarantee 99% of the time you will win something. What does that do? From a business model perspective, we need to contact our winners. Through that, we create another revenue stream, which is advertising that's embedded in our communications, whether it's via Facebook or whether it's via email, and so forth and so on. So the opportunity is tremendous because the market is very large, over 70 billion in the US and 6 billion in California. Thank you.
So how do you get people to know that your service exists? I mean, how do you reach all these people who buy lottery tickets?
Well, that is in part why we're going to have we're going to be partnering with the social media networks. So this type of product is almost natural. It's like a natural viral product because what people play in pools. So when you look at the market of people who play lottery, okay, greater than 50% of the people already play in pools, office pools. So it's all done manually right now. So all we're doing is automating that process.
So is this system up and running right now?
No, it's not. Not at this time. It's not up and running. It does take quite a bit of operational investment to make this possible, to do it right, and more importantly, to do it legally. We've invested money in getting a legal opinion that is quite lengthy on how to do it. In fact, I would almost call that a trade secret as such. We also have intellectual property around this, so we have a non-provisional patent that we have filed because of the mechanism of our pools and how they work, which is quite unique.
Okay.
So you're trying to be another ticket broker, I get that, but using the technology. Who are the other players who are doing it? Are you going to partner only with California? What are the other states? And what are the options out there?
Yeah, well, California, we are focused on California first. We're a California corporation, $6 billion market, and California encourages pools. They already have a mechanism for that. Other states that we could venture out to, some do encourage pools, some do not. So we would have to work, and each state has their own laws, and we'd have to get separate legal opinions for each one of those states. Right now, we're focused on California, which is a large market itself.
So you're getting a percentage of the total payment volume or the number of tickets bought. So what is that volume that we're looking at?
Well, you're looking at 6% of the total tickets. So let's say a pool, we set up a pool where there's 100 or 200 tickets in it. We would get 6% of those.
So what are those numbers? So how many ticket sales, what is the revenue number?
Well,
if you maximize and you capture the whole entire California.
6 billion, right?
Well, it would be 6% of $6 billion or $6.5 billion. Yes. Okay, but I don't imagine it will capture all of it. But we could capture 40 to 50% of it because that's how many are playing right now in pools itself. And we're doing it from a phone, so you can now participate 24/7. There's also a convenience fee to it.
Okay, can someone from outside of California buy through your pooling, portal?
There are certain that gets into the legal opinion, and in certain situations, yes and no. It depends. For California, you have to be a resident. So let's say, for instance, if you were out of state, as a California resident, you might be able to, depending on the state you're in, you might be able to play. But let's say we have a presenter here from New York. She decides to buy a ticket in California, and she wants to participate in a pool. While she's in California, she can certainly participate in that pool, and she can win, even though she's a resident of New York. So there's a lot of nuances.
The thing that I really got puzzled at, lotteries are really designed for people to lose money, right? And so your claiming that they're going to win, but I'm assuming they're going to win less than their ticket price, right?
Most likely, the odds are 1 in 279 million to win the jackpot. So we're not talking about winning the jackpot. A lot of people play the lottery for the dream. Somebody will win big prize.
But pooling doesn't solve the fundamental process that there's less money distributed than money collected.
Well, it increases the odds, and it also gives a better experience of the play. And it actually mitigates the losses for the investment, for the ultimate opportunity to win the large prize. Because you're always winning something at least.
So people are happy to buy a ticket $5 in a pool and then get $3.15 in return or something like that.
Right.
Which is wonderful. Good job. I mean.
Thank you.
Sure. Right, well, let's hear it for our panel. And once again, let's hear it for all our presenters. So we've arrived at the moment in the event that you've all been waiting for. It's the raffle. I know that's why you guys stuck around. So is there anyone that wanted to enter the raffle that has not yet done so? Going once, going twice. All right, we're going to get started. And again, grand prize is $100 cash. So let's get started with our first prize. It's the classic idea the IPO jacket, a fashion statement. Alan has one, but he didn't wear it tonight. We'll talk to him about that offline. And the winner is Tipos Envimento, Pedro Diaz. Come on down. Okay, next up, we have a phone charger. It's from IBM, one of our sponsors. Comes in handy. The winner is Grace Capital Ventures, Rocky Dayavarami. Okay. How do you like this? Roger Royce, Royce Law Firm, one of our longtime partners, dead on arrival. How to avoid the legal mistakes that could kill your startup. Hopefully no one here is dead on arrival. And the winner is Minivan USA, Coulter Chaudhry. Come on down. Next up, we have a book by one of our distinguished panelists. You can be a Silicon Valley success, Andre Guziak. Do you want to do the honors?
Sure, I'll be happy to sign it. And there's more on sale over there.
So why don't you have him do the honors? Bring the ball over there, let him pull it. And the winner is
Brown Bear, G. Diao. Present. Congratulations.
All right. How do you like this? Unlimited pass to Idea IPO proprietary events for December 2016. We'll have a very busy December, actually. The winner is Go Carrot, Tony Urban. Pulling it, did you have a prize? Pulling it has a prize. I wonder what the prize is. Go ahead.
I got 5 lottery tickets here. We got 1 Mega Million. No, 1, 2. We got 2 Mega Millions and 3 Super Lottos. And that's also another unique thing about pooling it is you're not playing just one lottery. You can play multiple lotteries. You can also put fantasy sports into it. You could do a lot of different things. A pool is just a pool. You're just investing. One transaction. Oh, there's just one winner? Okay, one winner. And all right. We got Brett Malone. Brett, are you out there? Brett went home? Ooh. Okay, keep it going. This is good. We have Sean C. Casey, PhD and MBA. I only got an MBA, so that's. All right, I'll try again.
Okay, if the next person is not there, I'm taking it.
All right, we have Jude Rajev. Jude, are you here? All right. Here's our next multi-millionaire. Come on down. I would, yeah, that would be a great deal.
Okay, so now we have the grand prize. And it's real. I got it from the bank this afternoon. And I know some people don't like to use cash, so if you win this and don't believe in using cash, just give it back. And the winner is well, that's deserving of a long drum roll, so Angels Global, Heather Chi, come on down.
It goes to an angel.
Okay, so now it's time for controlled chaos. If you want to talk to one of our panelists, come on up. Actually, stand. We'll form 4 lines. Talk to them for 2 minutes. We ring the bell. You got to keep moving on. That way, we'll give everyone a chance.
I'll be at that table over there selling books. It's where to find me.
And Andre will be over there selling books. So otherwise, thanks for coming.